Okay, so let's talk about FX now. Let me start the EuroCAD, the little trade idea that my marketing sent out today. I'm not sure if you guys seen it, but this EuroCAD chart looks very, very intriguing to me. So before I start, let's go to a weekly chart. Okay, weekly chart seems consolidating, but it looks a bit more bullish because if you see this high compared to all these highs, it seems like a key higher high has been formed. And if you look at all this from here, right, see a higher low, another higher low. Okay, so you can see that momentum is definitely to the upside. Series of higher lows and a new higher high form. Okay, so weekly chart, I like it to the upside. It looks really nice and bullish. Daily chart as well. Okay, now let me just delete this line first. But if you draw a line across here, okay, you can tell that the daily chart bullish momentum has came in because all these previous highs have been broken by this high. So this is a key high that has been made. So every day when I scan the markets, right, I'm looking for such setups, especially on the daily and 4-hour chart. New high highs or new lower lows to show me that the trend is changing. And what I like about this is that look at this candle here. Yesterday's candle made a very nice bullish pin candle at support at 1.47 level. So it shows me or gives me confidence that the bulls are in play. Okay, and there's a high chance that we might test the previous high here. Whether it can break new highs, I'm not sure, but there's a high chance that it might test the 14830 level. This is the previous high. Okay, but I mean, if you notice such patterns, right, it happens a lot of time. And if I go back to my PowerPoint slide, if you pay attention to the second price action pattern or even the last price action pattern, all right, you notice that it's very, very similar to where we are right now in the daily chart in EuroCAD. Okay, so these are the kind of setup that looks really good. And then from there, you just stack the odds and try to enter on a high probability level. Okay, so this bullish pink bar on the daily chart gives me confidence that bulls are still in play. Okay, so going to a 4-hour chart. So based on daily chart, I'm definitely more bullish. Now based on the 4-hour chart, now what caused that pin bar is basically this big little U-turn here. Okay, this big little U-turn, and then and then it started pushing up. All right. Now, if you look at the 1-hour chart, I'm going to lower time frames. Yeah. So what happens that again, that pin bar on the daily chart was formed by this level here, this little U-turn here. Now today, right, during the UK session, what I was waiting for is for the price to at least test this level here, around the 14730, before I plan to take a long here. Okay, a bit of a inverse head and shoulders, right? So I was hoping that it come down all the way to support, and then I'm prepared to take it up. Now, of course, we can see that it didn't come to my level, so I had no trade. But what happened that it just continued to push higher on the 1-hour chart, okay? Continue to push higher on the 1-hour chart. So if you look at the 15-minute chart, okay, we can see that it didn't even come back down but push higher. See this level? And right now we're just mucking around this level. Not sure whether we can break the 148 level or not. Okay, this I took another entry somewhere here. Okay, one of this retracement. Hopefully it might materialize. Okay, but my trade plan is based on the daily chart because daily chart seems very bullish, and my target is around the 14830, which is the previous high. Of course, if you can break new high, even better still, but this is definitely the first target, 14830, which is about 50-60 pips from here. Quite a decent level. Okay, this is more of an intraday trade. Will I chase this trade? No. Where I took it is, okay, I took it at this pullback here. So again, this is a 15-minute chart. Okay, I wanted for it to retrace to somewhere here during the UK session and take it up from here. This will be a very beautiful trade because my risk will be protected. Very nice risk to reward. But what happened during the UK session that you see this move here? It broke through. It broke through. Okay, so I was a bit more aggressive. I waited for retracement. I think I took it somewhere here. Okay, and I hope that it might push up further. Now, what happens that if it turns around? Okay, then so be it. I get stopped out. All right, but does that mean that my trade plan is invalid? No. Okay, because if it turns around towards the downside, if you go back to your 4-hour chart, right, you can see, just take away the drawings. Okay, if it turns around the 4-hour chart, you can see that it might be just coming back to this support level here. Is the trade plan still valid? Yes, it's still valid. Because based on the daily chart, it still looks bullish to me. Okay, so you just need to have very clear mindset of what are you trying to trade, which time frame, what's your expectations, and things like that. Okay, because sometimes it might take some time, before it want to push up further. So if the 4-hour chart turns around, it does not mean the daily chart is turned bearish. No, it just means that it might retrace further before wanting to go up. Okay, I hope that answers your question, Lenny. So try not to chase a trade. There's always opportunities out there, but you need to know what you're planning for. And even if you get stopped out, so be it. Okay, you just need to know which time frame you're planning for. All right, so getting stopped out is the name of the game. I mean, this part of it. Yep. On 4 hour, it make lower high. Where's the 4 hour chart? Oh, you mean this one? Yep, you're right. This is a lower high. Something like that. Okay, but because my entry was somewhere still okay, still I think I'm about 10 pips in. For me, the key level, if it breaks this level here, then I know I'm wrong already. Okay, this line here. But right now, I'm just willing to let it breathe and see what happens. Where do you place stop loss? Good question. Okay, all these are good questions because it applies to your trading as well. So because I'm taking based on this 15 minutes breakout pattern, right? And there's a pullback, right? Now, you see the support level here? Okay, my stop loss is actually below this low, below this resistance level here. Because if you come back all the way down, it means that the 15-minute push up or 15 minutes breakout might not be valid, Okay, so this is the key, the line in the sand for me. If it goes below them, I'm out. All right, so let's see what happens. But based on the risk to reward ratio is still decent because I'm targeting the previous daily high about 14830, but my risk is only till this level here, 14750 or so. Okay, now I'm sure if you notice, if you trade cross currencies, right, the movement can be very big. It's just that now the volatility across market is very low. Normally Euro CAD, Euro Aussie, Pound Kiwi, normally pairs like this, right, intraday you can move more than 100 pips easily. Okay, so just got to adjust your trading style to the volatility of the market as well. Okay, so let's do a Euro CAD. So that's what I'm looking for Euro CAD. Hopefully it will still go to the upside. The other thing that I saw that caught my attention is Pound Kiwi. Okay, Pound Kiwi is quite interesting as well because if you look at the weekly chart, right? I know some of you don't trade exotic pairs, but trust me, sometimes the exotic pairs are the really nice movers. I've not traded a dollar pair for past 2-3 months. I'm not joking because I don't see any. If you look at pound dollar, if you look at euro dollar, it's like there's no movement at all. It's just the Fed playing Simon Says with the market. Is so irritating. One moment up, one moment down. So I really don't touch such markets, but I'm in love with the cross currencies recently. So if you look at the pound kiwi, right, you can see the weekly chart. Now, what is this? Uptrend or downtrend? Okay, if I zoom out for you, look at this level where we are at. This is a key level of support. I would say it's the last level of support for the pound kiwi. And does it seem that it has been broken? Probably, you know. So on a long-term basis, let me take you to a monthly chart. If this 176 is broken convincingly, okay, if I pull back all the way to 2006, I don't have any more data on my chart. Maybe I have, hold on, yeah. Yeah, I don't have, I'm sorry. But basically, if this level of support breaks, okay, the key level of support is around the 1780 to 180 level. If it breaks, right, there's a high chance it might drop 3-4 from here on a long-term basis. Look in the weekly chart, you can see this. Okay, so these are things that I'm always looking out for on a weekly, daily, and forward chart. New higher highs or new lower lows. Okay, so weekly chart seems very bearish. Daily chart seems really bearish as well. Okay, so you can draw your line here. This is a line in the sand. Okay, in fact, when it broke this support, it's quite a key level support broken already. All right, so you can see that there's no divergence, nice convergence, double top, lower low. Okay, so if you're a swing trader, who was the one that was asking for swing trades? Sita, I can't remember. Sorry, but if you're looking for swing trades, this is one of it to definitely pay attention on. Okay, because if it breaks, if the candle closes like that, right, for me it's considered a break already, and maybe it will be traced slightly here and then boom, make another leg down. Okay, it's a swing trade kind of setup. Yep. So let me just go back to here. So if you go to a daily chart, it looks very bearish already. If you go to a 4-hour chart, okay, it looks even more bearish. Look at that, crazy bearish. Okay, now don't change the market. It's bearish right now, but this will be the worst place to short. Okay, because that's where do you put your stop loss. Okay, so what I'm looking out for is hopefully can be traced to this level here, somewhere here. Okay, the key thing to note is do not chase the markets, especially if you're intraday trader, right? If your 4-hour moving average is so far from the price, do not chase the market, okay? Because high chance it might retrace a bit, wait for the moving average to catch up, and then continue the trend. So especially if you're intraday trader, your 4-hour and 1-hour chart, try not to chase it, all right? Especially when the moving average is far away like that. Okay, same thing if you're a swing trader. If you're daily, if assuming this is a daily chart, right? If you see the moving average and your price is so far away, even though the trend is strong, try not to chase it because high chance a retracement might be coming up. Got it? Okay, so this is pound kiwi. If you look at the 1 hour chart, same thing, looks very bearish. Okay, so I will start planning trades anywhere between 177 to 177.40. Okay, in this zone, and hopefully it can make new lows. Alright, but I'm just sitting back and being patient because key thing to note is this: on the shorter term chart, like the 1 hour, right, can see that it has massive divergence. So you see all this low compared to this new low, and you compare this swing low to this swing low here. So you can see that this is a potential higher low on the MACD, but it's a very big lower low on the 1 hour chart. Therefore, on an intraday basis, there might be a retracement coming up tomorrow morning. Got it? Okay, so this is another chart that is really beautiful to the downside. All right, and your job as a trader, or if you like the way I scan the market, is basically look for such setups every single day, every single week, because these are the setups with nice momentum, with good direction. It's so much easier to trade. Okay, I know some of you here. I mean, sometimes when I talk to clients, I show them which markets are moving and have good trend, right? What they do is that instead of following the trend, they try to buy from here, because they think that, oh, it's gone down too far, why not just buy from here? Okay, don't do that, yeah, because it's very, very dangerous, especially if there's no support up ahead and you're just buying just because you think that the moving average is very far away from the price. Okay, that's not trade planning. Okay, that's more like punting. So I'm not saying that counter trend is wrong, but at least counter trend smartly. Don't just go opposite just because you think that, or maybe you see this so many red candles is due to go up. All right, this is all reasons that you conjure up in your own mind to try to suit your trade plan. It's not trade planning. Proper trade planning is using your technical analysis to support your trade, not using your assumptions and your perceptions to form a trade. There's a big difference between that. Okay, so if you plan for your trade, you got always give reasons. For those of you who have no discipline to stick to your trade plan, write it down. Okay, so you say, okay, pound kiwi daily downtrend, 4-hour downtrend, 1 hour downtrend. However, 1 hour has a bullish divergence, so I'm waiting for it to retrace next to near to 1.7740, and then I'll wait for a 15-minute change of trend there to take it short to continue the daily trend to the downside. Okay, so this is what I mean by trade planning. You can write it down. After a while, it'll be crystallized in your head already. Okay, so that's pound kiwi. Which moving average do I use? Basically, what I have here is the 20 and 50. Okay, I also use the on my own platform. I also have 5 and 10. Okay, but I mean, whichever you use, there's no magic formula. I hope you understand that. It's just whichever that you are comfortable with and what you've been using. All right. Okay, so that's pound kiwi. Any other FX pairs that you want me to cover? Pound cat. Okay. Today is the day of cross currency. It's awesome. Cat seems to be moving today. Oh wow, good call, Lenny. Let's see, pound cat. Okay, let's see the weekly chart. Okay, not as nice as what's the other one? Euro cat, right? No, no. Sorry, not as nice as pound kiwi. Sorry, just not as pound kiwi. So pound cat, it is in a downtrend. Now, what I don't like is hold on, let me have a quick look. Okay, so this is a weekly chart of pound cat. Let me have a quick look here. Okay, so it's supported here. Now, what I don't like is the way it's consolidating here on the weekly chart. Okay, I mean, it's very clear that the resistance is around the 176. Okay, but the weekly chart is not as nicely trending downside. It's a bit more consolidating. Okay, so let's go to the daily chart right now. Okay, so daily chart, you can see that most probably it might come back to this level. It looks like it's trying to form a kind of inverse head and shoulders. Okay, and basically it's just stuck in a range. I think intraday wise, if you want to look for intraday trade, there's a possible short that you can take if it pulls back to the, and your target will be the 1.7 area. Basically back to the shoulder level. But I can see the moving averages and things like that, daily chart is a bit more consolidating already. Definitely not as nice as pound kiwi because that one's very nice trending. 4-hour chart, okay, 4-hour chart, I can assume that it's bearish. Yep, it is. Okay, so you can see the 4-hour chart, yes, it's bearish. I mean, the intraday kind of trade plan that you can take is that if it pulls back to the previous level here, okay, and then try to take it down again back to the head and shoulders level. I think it's around 1.7 here. Okay, but just always bear in mind the higher term time frames because it's not as clear cut yet. It looks that it wants to come down, Okay, but it looks like this one come down to the previous shoulder near the 1.7. Okay, Lenny? Okay, gold. Agnes, I'll cover gold just a bit. Let me do my FX first. Okay, let's do dollar CAD. Okay, I'll do dollar CAD, CAD yen, and gold, and then we wrap it up for the day, okay? So CAD yen, sorry, dollar CAD, sorry, this is dollar CAD. Okay, so dollar CAD, who asked for dollar CAD? Gia, is it? Sorry, can I call you Gia? So Gia, this is a really decent setup because what you can see for dollar CAD is that the market has been consolidating for quite a bit and it looks like it wants to break to the upside. Alright, what I like is that it's forming a series of higher lows here. See? Higher low, and right now this is the previous two highs, and if it breaks, right, what level is this? I think this is a 132 level. Beautiful. So what I like is that this weekly candle last week, the candle closed above the 132. That's a sign of bullishness. Alright, and I think definitely I'll look for upside trades here, bullish trades, and the target will be the previous resistance near the 134. Okay, so thanks for pointing this out. Nice trade. Okay, I'm going to put this on my short list as well. But anyway, so weekly chart looks nice and bullish. If you look at the daily chart, okay, you can see that, I can see that it is trying to push higher, and nice bullish pink candle here at support. High chance that we might push all the way to 133, 134. Okay, daily chart has nice higher lows as well. Okay, in fact, we have made a new higher high on the daily chart, and looks like I want to push further up. No divergence here. Looking good. Let's go to the 4-hour chart. Okay, 4-hour chart looks nice. Okay, now 4-hour chart is a bit, still an uptrend. So what I like about the dollar CAD is that weekly shows potential to upside, daily uptrend, 4-hour uptrend. Right now, it's just consolidating a bit here. Okay, so just be patient now. What you want to see is that if you're not in any long trades, right? The first trade plan is that if it breaks above this level, then maybe you can try to take it up. That's the first trade plan. Okay, now ideally I want it to come back down to this support level here, and then maybe you can take it up again. Okay, so these are the two trade plans that you can look up for. I prefer for it to retrace one more time, but we'll see what happens. The reason why I say that is because the weekly and daily chart definitely looks good to the upside. Yep, and the key support that you look out for, right, is around the 131, what level is this? Around the 13120 area. You see this line here? This line here, 13120. Because if it breaks back below this line, then the trade plan is not valid anymore. So 13120, 13110 support region, that's the line in the sand. Okay, if not, high chance we'll make a push up again. Okay, so that's dollar CAD. Now next one, CAD yen. Where's my CAD yen? Woo, CAD yen. Okay, let's go to a weekly chart. So I hope you guys are getting the hang of price action. Really is a beautiful thing, price action. You feel so powerful sometimes when you can use price action to predict the markets. Let's say, okay, so CAD yen. Who asked for CAD yen? Alvin. So Alvin, CAD yen now. Weekly, it is a nice downtrend. However, be very, very careful because look at how it's got like triple bottom scenario, isn't it? And if you look at the bigger picture, you got lower low on the weekly chart here, but you got a higher low here. So this is called a bullish divergence. Bullish divergence. So there's a chance that it might push up. Okay. Now, however, even if you're bearish, right? It definitely looks bearish. I will let it break this 77 level first. This 77 level is very, very key support. Okay. If we go to the daily chart, okay, you can see that yes, it has come down quite significantly for the past few days. But this 77 level is key. Okay, and even on the daily, there's divergence as well. So I wouldn't be so keen on taking it down unless it breaks this level clearly. But you can see divergence here. See, higher low, but lower low here. Potential bullish divergence. So not good to downside. So even though if you're bearish, right, you need to let it break the 77 here first. Very, very key. Okay, will I go long? No, there's no long. I mean, the trend is still down. It's just that it's a support right now. Right, so just be patient. If you want to short, let it break 77 cleanly first. Good to buy? No. It's against any trend. Weekly is down. Daily is down. 4 hour is... Let's see, 4 hour. Yeah, 4 hours is down. Okay, so sometimes when I say that the trend is down, it doesn't mean that you can just short like that. So for this is a perfect example whereby weekly is down, daily is down, 4 hour is down, but I'm not looking to short because we are at support already. Okay, am I looking to buy? Also no, because it's a downtrend. So what you want to do is you only want to find high probability. Of course, this might be a good level to buy because it's support. but support itself is not a good enough reason for me to take a trade. I want to follow the trend. So sometimes if you think that this is support, for all you know, the trend might push it lower, maybe back to all the way to 76.50 before it bounces back up again, just to trick you. Okay, so it's against the trend. So even though this support, there's not a good reason for me to buy. All right. In fact, I'm just being patient and let it see what happens. If it cleanly breaks 77, then I'm more than happy to join in the short side. Okay. But however, if it still consolidate around 77 cents and there's still bullish divergence, then maybe you can try to look for counter trend trades. But right now, not yet. Not yet, because the trend is mostly still downwards. There's no consolidation yet. Okay, very seldom, especially on a 4-hour daily chart, very seldom the market would just downtrend, 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 and then they boom like that. Okay, unless there's a fundamental change or news. Okay, but more often than not, it will downtrend, 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 consolidate, sometimes make a cheeky lower low, and then push up. Okay, so this scenario is more possible than the V-shaped scenario. Okay, no, in terms of shorting Alvin, I would rather let it break the 77 cents first. Okay, because you can see the weekly chart, this is a very, very key support that has not been broken since June period. Okay, if it breaks below, then I'm happy to take a short. Okay, if not, I'm just letting this currency pair go. You got it, Alvin? Okay, so last one is gold. Let's see, gold. I mean, at the end of the day, Alvin, I'm always looking at high probability trades. Okay, so I'm always looking, number one, trending markets, and number two, areas to support my entry. So if it's trending up and I want to buy, I'm looking for higher low and multiple levels of support to enter. If it's trending down and I want to sell, I'm looking for lower highs and multiple levels of resistance to enter. That's it. Now, gold. Let's see gold. Agnes, right? So let's see gold weekly chart. Okay, so gold weekly chart looks bullish. Okay, in fact, this area here is what you call a bullish flag chart pattern. And the bullish flag chart pattern is more often than not, it's a continuation pattern, trend continuation pattern. Okay, so there's a chance that we might continue. Our key support for gold is the 1300 level. Okay, 1300 level. Now, we are near that level, which is good, okay, because it's a bullish flag scenario, moving averages are supporting the trend, okay, and let's see whether we have divergence. Yeah, and if you look at the MACD, right, you can see that this low compared to this low is a lower low, but this low compared to this low is a higher low. So for this case, it's a bullish divergence, okay. Now, let's go to the daily chart. If you look at the daily chart, okay, if you look at the daily chart, you can see that it's consolidating into that flag that's talking about on the weekly. All right, and this level here, 1300, all right, you can see multiple levels supported. Tested here in July, went up. Tested in August, went up. Now it's testing again. So what you want to do is, where we are right now, okay, you can go to 1 hour 50-minute chart. If you see the trend changing on the upside, there's a chance that we might push higher again. Okay, but the key thing is that it must break this level of okay, it must break this level of resistance, 1340, before it will push higher. Okay, but this is a key level to watch out for. Agnes, right? This 1340, it's a key level to watch out for. Especially if you see lower term time frame changing the upside, there's a chance that it might make a push higher. If it breaks this resistance, 1340, then yes, we might continue the uptrend. I'm more inclined to be on the bullish side for gold. Okay, but a lot of the markets, like for example, gold, silver, dollar pairs, or even the yen pairs, all the analysis that we did today can change in an instant when news comes out tomorrow and Thursday. Okay, so don't trade blindly just on technicals without knowing what's happening out there in the news. Okay, in fact, whatever I said today, you can throw it down the drain if the FOMC does something else. All right, but again, it's the process that's more important. It's not my trick call. Okay, it's the process. So if you know the process, whatever happens in the markets, you know, the Fed can do whatever he wants. BOJ can do whatever he wants. If you follow the process, if you know how to analyze the markets, that you know how to plan a trade, there's no problem. All right, you can be flexible as a trader. You know what to do, and you'll not be pushed around by the market's volatility and news. Okay, so that's it for today. This webinar will be recorded again. I'll get my marketing guys to upload it as soon as possible. If not, thank you so much for coming by, and I'll see you in 2 weeks' time. Have a good night. Take care.